Good evening, everyone. Just want to welcome you to our last Financial Literacy Month presentation, Recognizing and Avoiding Investment Scams. And as usual, we have James MacTavish here from the Alberta Securities Commission.
Hi, everyone.
And we will have James introduce this just a little bit more, and he will get started on his presentation. So James, just hang on a second. I'll make you host so you can do everything here.
Perfect.
And there we go.
Awesome. Okay, I'm going to share my screen. Okay. All right, see my screen? Perfect. All right, so good afternoon, everyone. Thank you for joining me for Financial Literacy Month, and in particular, this presentation on recognizing and avoiding investment scams. Right now, there's so much news, so much coverage, so much social media, even your friends may be talking about it, but around investing and making money, and there's so many opportunities out there that could leave your head spinning. And spending so much that you might miss out on, approaching investing correctly, and you might inadvertently get yourself involved with an investment scam. So this presentation helps cover, how to recognize those too good to be true investments and how to ultimately avoid and report those investment scams to the Alberta Securities Commission. So just as a disclaimer, before we get started, I just want to quickly remind folks that today's presentation is to provide helpful information about securities and is not intended to provide legal, accounting, or other professional advice. So the Alberta Securities Commission, if you haven't heard about us or you haven't seen our other presentations with the Red Deer Public Library, don't worry, we don't take offense. The ASC is the regulatory agency responsible for administering the province's securities laws. We have about 200 employees who create and enforce the laws, rules, and regulations that govern the Alberta capital market. While we report to the Alberta government, we are funded by market participants. So when a financial advisor registers for us or a company goes public, they pay us a fee as a means to ensure a fair and efficient capital market and investor protection. And because of that investor protection mandate, we put on unbiased investment literacy programs like the one you're watching right now. So you can make informed investment decisions and protect yourself from things like investment scams. So here's what we'll cover today. We'll cover the fraud facts, common types of investment fraud, the red flags of fraud, how to protect yourself, and how to report an investment scam. This will really help you understand and recognize those situations where you might be involved with investment scam, or the things that might pop in your head as a red flag as, hey, that sounds like it could possibly be a scam. So these will really help be those tools that you have when it comes to any kind of investment offer that comes your way, whether it's in person or online. So let's talk about fraud in Alberta. What percentage of Albertans believe they've been approached with an investment opportunity that may be questionable, not entirely real, or potentially fraudulent? Well, it might alarm you, but it's 48%. This is a very high number, and it gets higher when we talk about older demographics. 54% of 45 to 64-year-old Albertans believe they've been approached, and that number climbs to 60% for ages 65 and over. So this is incredibly common here in Alberta. And part of this is really recognizing that this could happen to you. And so the more we can stay, wary of any type of too good to be true investment offer, the better off we can be. So let's hear a story about a particular investment fraud case that happened here in Alberta.
I first heard about this investment opportunity through our chiropractor. He was an investor and was telling us how much he was making a profit off of gas wells. He knew that I was an engineer in the industry, so he was pushing pretty hard about this investment and thought it was a great opportunity for a young family to make some extra cash. They provided all that information on paper, basically what the company held in assets, background of the gas plant, their wells, pictures of the facility. Those facilities did exist, and it did look it looked legit. It seemed like they were in a rush to to make a commitment, and even when my wife went to hand over the bank draft, she had this uneasy feeling because he was come see me now, come see me now, can you come right away? And she just had a bad feeling in her gut once she handed the check over. They promised that they were going to start drilling on this date, and then it was delay, the lack of communication, the postponement of our field trips. Went out to the facility and all of a sudden started realizing that, parts of the plant weren't there that they said were there. And there was a sign at the gates basically saying that the landowner, had locked the gate because of default of payment. I looked at the LSD of the well that they were going to drill, and they never pulled a drilling permit to drill that well. So that's when I knew, and that's when I got in touch with the Alberta Securities Commission to file a complaint. They were great to work with. They were very professional, so it was good. It was a good experience. If it sounds too good to be true, it most likely is. Don't look for an easy way to make money, because I don't think there is one. It affected our family life. My wife, probably seeing the change in my personality, just accepted that we're going to have to make the money back some other way. So that's what we've done.
Now, that's an unfortunate story of investment fraud, and I hope there's some elements of his story that you were able to pick up on. In particular, being kind of rushed into the investment offer. This is very typical of fraudsters, as they want to reduce your amount of time to actually do research around the investment or the supposed investment. Unfortunately, this individual started looking into the investment and started to see red flags after he had handed over his money from his family. And then just for a moment, I want to say how important it is that you research any investment offer beforehand. Take your time, no matter who's urging you or rushing you to do so. That time is critical in helping you understand if it's legitimate, but also if that investment offer is suitable for you and your risk tolerance. So unfortunately, he handed over his money to a completely false investment that was a scam. And the impacts of investment fraud goes well beyond the financial implications. As you've heard from Chris in his testimonial, his wife saw a change in his personality. And that really has to come down to the fact that fraudsters utilize your trust, and they deploy a tactic of grooming their victims. So doing everything they possibly can to instill trust, to then ultimately break it and steal their money. So that can have a huge impact on your emotional and physical well-being. And it can impact the relationships and trust in others. So when we think about investment fraud, don't think of it just the financial component, but also think about it on the emotional level of how important that trust component is in your life, and how they utilize it to really sell you on investment. So we can use that knowledge to then think about how do we approach any type of investment offer to make sure it's safe and legitimate, and then also suitable for us. And common ways of being approached when it comes to investment fraud is, through social interactions, cold calls and emails and advertisements. This slide can really show you that it comes from a variety of different angles. Now, when it comes to emails and phone calls, I think a lot of us are pretty savvy enough to go any kind of an unsolicited offer for investment through phone or email, we're kind of quick to hang up. When it comes to boiler rooms, these are really targeted at people who have already been defrauded before. These boiler room calls are, to help get your money back or to secure your funds back. And these are also completely fake. What happens here is that the fraudster has actually sold the information of someone who's been defrauded to other fraudsters who will then contact them acting like maybe the RCMP to try to help them recover their funds for a fee. All completely false. When they pay the fee, these fraudsters also disappear as well. So they essentially double dip. So a good thing to remember is that no credible agency will ever ask you to pay a fee to help you recover your funds from investment fraud. If that ever happens to you, always contact the ASC. The other elements of this that I really want to kind of drill down into is social interactions. It may seem odd to see friends and family on there, but investment fraud can come through those angles. And those are also, really insidious, as it's hard to question your friend that you've known for 10 to 15 years about an investment offer. You think they're doing well for you. So we're going to cover what that's called. It's called affinity fraud, and we'll go into more depth about it. But that is certainly an angle that fraudsters utilize. So let's dive into more. So the common types of fraud. You have affinity fraud, which is, again, that fraud that really targets the use of friends and family and community members to sell the scam. Ponzi or pyramid schemes, we'll go through those. Those are closely linked to affinity fraud. Pump and dump schemes, binary options. Binary options is really about wagers, almost like a gamble on how stocks are, or any type of asset is going to perform in the stock market. It's important to note that in Canada, that selling binary options to individuals is illegal. So it's not something really that you can utilize. So there's a lot of binary options advertisements online. Disregard them. Those are most oftentimes fraudulent, and they're really targeting people who might be desperate. They might have lost their job, or they're looking to try to make money quickly. And it's really targeting them. So it can only make a really bad situation even worse. The next I want to highlight is Forex scams, and these have been really popular during COVID. Forex scams is foreign exchange trading. Now, this in itself isn't illegal, but there is a lot of companies out there, or a lot of fraudsters who advertise Forex trading platforms. Now, these platforms are really targeting people who maybe have lost their job or looking for a secondary channel for income. And it paints it out as a very easy to do process. And they have the platform as well as the training to get you doing Forex trading. Forex trading is extremely complex. It requires quick trading of currencies to capitalize on fluctuating prices between different currencies. So it's very complex and hard to be good at. And so these advertisements say that it's really easy, and once you log into these platforms and you provide your money into them, they're gone with it. The whole platform is fake. The trading or the training platform is completely fake. And they might even make it look like you're actually doing some trades when all of it is complete sham. So those are also advertised online, so make sure you stay away from those. The next is recovery room scams. And this is, again, that boiler room situation in which they try to double dip on someone who's been defrauded before. They will say that they are some type of organization that is helping victims or helping to resecure your investment. All of it is completely false. If this ever happens, again, call the ASC. And emerging sector scams. These are really tied to different and trending topics in the world. We are still in a pandemic, and the pandemic has been a huge emerging sector for fraudsters to utilize, whether it be new ventilators that are being created, or new cures for the COVID-19. So when it comes to emerging sectors, if you ever get an investment offer that comes through from whether it's a friend or family, or it comes through online that kind of ties to an emerging trend or something buzzworthy like cryptocurrency or cannabis, take that time to do that research, because a lot of fraudsters like to jump on what is hip and cool and what people are talking about. And now I'd just like to play a video about affinity and Ponzi schemes, as these are quite prevalent and they're insidious.
Affinity fraud can happen to anyone, but seniors are often a targeted group. You could be targeted by someone close or a member of a group with common interests. They'll use their relationship with you to get you to invest, often without you having done any research on the investment because of the trust that you have for the person. When a fraudster targets a group, they'll build relationships with influential members to gain acceptance. Ultimately, their goal is to convince these leaders to trust their investment advice, and in doing so, convince others in the group to invest along with them. The leaders often have no idea the fraudster is out to steal your money for their personal use. In the end, you're left with a huge loss and are less likely to report the fraud because you don't want to lose a friend, or you simply can't believe your trust could be abused that way. Protect yourself. Know the red flags. Be suspicious of anything that seems too good to be true, and research anyone who gives you investment advice, no matter how trustworthy the person seems. Don't be drawn in by lofty promises. Even short-term initial returns may be false. Many affinity scams are Ponzi schemes, where new investor money is used to make payments to earlier investors, giving a false and temporary illusion of success. Ultimately, research the investment and the person recommending it. Ask plenty of questions, and consider seeking advice from an objective third party. Check first and research using the ASC's resources before you make a decision to invest. And always consider what you can and what you can't afford to lose.
Now, let's start with affinity fraud. This is really a fraud that starts close to home. Scam artists really take advantage of the trust we have in our friends, family, and colleagues. And really, they utilize that trust to promote their scam through the group, whether that's a religious organization, ethnic communities, social club, professional associations. They really work these angles to make sure that it comes to you from a credible source. So what it ultimately looks like is maybe your friend of 10 to 15 years and maybe your tennis club comes up to you and says, hey, I got in on a great investment opportunity and I've already made $500 this past month from it. You should get in too. And because it's your friend of 10 to 15 years, you might be inclined to jump in and hand over your money. But again, this is something where you can't let your friends' lack of research or your family members' lack of research be your lack of research. They mean well, but they don't know that they've been involved in a scam already and are unknowingly pulling you into it. So the best way to avoid affinity fraud is always know where it originates from. If it comes from your friend, ask, who is the person offering this investment offer, whether it's a firm or individual, and find out who that person is. Once you find that information, check if they're registered. It's really important to understand if the person or firm is registered, as it's by law that they have to be registered here in the province of Alberta to sell investments here in Alberta. Once you know that information, do your research at checkfirst.ca to check registration, and also do a deep dive into the investment itself and make sure that it's credible as well. And Ponzi schemes are closely linked to affinity fraud because it's often the type of scheme that they utilize. So they onboard people through affinity fraud and they pay into this Ponzi scheme. Now, the key things to remember here is that Ponzi schemes typically promise high rates of return with little or no risk to investors. And returns are not paid from profit, but they're actually paid from the money of new investors coming in. So money funnels up the system all the way up to the fraudster. So early investors usually get promised high returns as long as new investing occurs. And the scam will, as you know, collapse when there's no new investments, because that's our new investors, because that is where the money comes from. Again, there is no legitimate investment behind the business. So whatever information you get around this investment offer, always do your research, because that can help you understand if what they're saying as an investment is real or not. And that's a key way to identify if it's a Ponzi scheme. And the other one I mentioned was pump and dump schemes. And this one has been prevalent during the pandemic. The potential investor receives either an email or a call promoting or what's called pumping of an incredible deal on a low price stock. What's actually happening is that the fraudster has purchased a stock that is maybe cheap, maybe a penny on a small exchange like a venture exchange, and buys thousands upon thousands of these shares at a low cost. He or she then begins to promote this company, whether it's related or not, about a certain buzzworthy thing. It could be, in the case of the pandemic, about COVID cures, and create fake literature, news releases, a fake website even, to promote this fraudulent investment. As they promote this to would-be investors, investors get excited and they start buying into the stock, not knowing how much of the stock has been purchased by the fraudster. As more and more of these investors get on board and they start buying the stock, that's when you see the price of it start to rise. Once the share price hits a peak, and the scam artist knows that this is the best he's going to get with getting new investors on board, the scam artist will then dump their own shares and capitalize on this rising price of the stock that he bought thousands upon thousands of shares of. Once he dumps all of his stock, that's when the value of the stock plummets, leaving all the other investors who got in with worthless shares. Now, the key thing to remember here is to do your research into those investments beyond what the information that was provided you by either that individual or that firm. It's so critically important that you do that deep dive and dig into that information, because that can help you understand if this company, which maybe made car parts only 3 months ago, does that correlate with now that it's making vaccines? It can help you see those discrepancies and really help you pinpoint if this is actually a credible investment that you should get in on. And emerging trends. So I mentioned it earlier that emerging trends is quite a big thing for scam artists to utilize to get you in on an investment scam. They talk about everything from cryptocurrencies, binary options, cannabis, day trading, forex, robo-advisors, crowdfunding, anything that's popular right now that has really hit critical mass is what they utilize to then try to sell you on an investment scam. So whenever an investment opportunity comes your way, whether that's online, through a friend, family member, or a new acquaintance, and it's tied to one of these emerging trends, really take that time to dig into it and see, okay, is this credible? What do I need to know here? For instance, binary options, it can't be sold to individuals. It's banned in Canada for that. If someone's trying to offer you that opportunity, that's a moment for you to go, hey, wait a minute, I know that binary options can't be sold to individuals, so this is something that I need to back away from. So when it comes to emerging trends, take that extra moment to step back. So now that we know about the most prevalent types of scams, and we know really about the framework of some of the most popular ones like affinity fraud, what are the red flags that we can look for? Now, when we talk to a lot of victims of investment fraud, they always highlight, oh, something was bugging me, something was nagging me, or I knew this element just seemed too good to be true, but the person was really confident in the investment and I got in. What those nagging thoughts or feelings were red flags. So we have broken down what those red flags are. And I highly suggest that if you're ever offered an investment offer and one of these red flags pop up, don't ignore it. Really zero in on what's bothering you and why, because it's your brain telling you, hey, wait a minute, this doesn't make sense. And also, if you don't know what you should be looking out for, this is perfect. This will help you really understand what part or element of an investment offer could be fraudulent. So first, guaranteed high returns, no risk. The essential virtue of investing is that with high returns comes high risk, with low returns comes low risk. That duality will never change. Anyone who tells you otherwise is most probably trying to get you in on an investment scam. You have to remember, if something is high returns with zero or little risk, we would all be rich. And you have to ask yourself, why would someone try to be getting me into this investment if it is a for sure thing that's going to guarantee wealth? Why wouldn't they just keep that to themselves? So remember, guaranteed returns, there's no guarantees when it comes to investing, and certainly high returns, no risk is a clear red flag of fraud. Great investment opportunities. Your friends can't be wrong. This is affinity fraud. When an investment offer comes in through friends or family or close acquaintances, you cannot let your friends' lack of research be your lack of research. Take that time to understand where the investment offer originates from, check the registration, and check if the investment offer is legitimate before you hand over any of your money to anyone. Insider tips, profit like the experts. Insider tips is in its very basic level is illegal. Public companies have to disclose public information publicly if they are a public entity that's trading on the stock market. That's to make sure that it's a fair and efficient capital market. If someone within the company is providing insider tips to help particular investors, that's insider trading. So if anyone's offering you insider tips, that's already something illegal and not something you want to get involved with. Insider tips is also something that's utilized in investing seminars. They try to create this idea that they have inside knowledge on particular stock, and then they try to use high pressure sales tactics to get you involved in the investment scam and make it feel like you can't leave unless you invest. Don't let anyone make you feel pressured into investing. No credible firm or investment professional will ever try to force you into an investment. So make sure you walk away, and remember that if you're going to approach investing the correct way, you can't utilize things like insider tips. That's illegal, and you can report that to the Alberta Securities Commission. Don't miss this opportunity. Get in now. The kryptonite on the weakness to invest fraudsters is research. Research helps you uncover if they're registered. It helps you uncover if the investment is legitimate, and it helps you dig into those red flags that could be bothering you. So of course, when it comes to a scam, fraudsters like to push the investment hard and get you to invest right away. By getting you to invest right away, you're not doing your research and you're handing over that money so they can take off really quickly. No credible firm or investment professional that's registered will ever push you to get in on investment right away. Remember that investments that are credible will always be there tomorrow, and it's more important that you take your time to understand if the investment is credible and if it's suitable for your risk tolerance as well as your financial goals. So do that research because it is so important that as an investor that you invest with the success with investing in suitable investments for yourself that are legitimate at the end of the day. Offshore investments tax-free. As Canadians, we're offered the great investment accounts like RRSPs, so registered retirement savings plans, that defer taxes on our investments till we're ideally in retirement, as well as tax-free savings accounts. So really, generally speaking, our investments are tax-free within those TFSAs. Those are great accounts for investing. They do have contribution limits though, and a lot of people might look towards offshore investments for that tax-free angle. This is very dangerous, as a lot of these offshore investing platforms are really hard to get your money back, and a lot of them are not legitimate. So when you invest in an offshore company or offshore investment firm, it's really a sketchy thing where it's going to be very hard to ever get your money back. So unfortunately, just like death, taxes are something that's unavoidable. So look towards investing the appropriate ways, utilizing TFSA and RSP, and really unregistered accounts. But you can't use offshore investment platforms because it's very, very high risk, and a lot of them are just scams, just looking to take your money. The next is celebrity endorsements. It must be legitimate. You know, there's so many celebrities out there talking about different types of investments to get into, what you shouldn't get into. You can't let that be your guiding path when it comes to investing success. Create a financial plan. Create a backing of really what your goals are and when you want to achieve those goals. And then focus on investments that meet your risk tolerance and suitability and help you get to those goals on time. That requires more research and maybe even the use of a financial planner or a talk with a registered financial advisor to help you get there. But a celebrity is not that. You do not know what kind of stake they have in it. It could be a fraudster who's using the likeness of a celebrity. It's just not a great way to go. So avoid that. It's a red flag. And check registration. This is so important. Check registration can help you identify if that individual or firm is registered and qualified to be selling you investments. By law, that person has to be registered in the province of Alberta to sell or offer investments here in Alberta. So always check registration. The Securities Exchange Commission in the US said that 80% of fraud could be stopped in its tracks if people took the time to check registration, as well as understand the duality between risk and reward. So understanding the suitability of an investment. So take that time because it's a great way to stop fraudsters dead in their tracks when it comes to any kind of investment offer. And you can do that at checkfirst.ca. Very quick process, takes under a minute to do. And so it might be hard to understand scenarios where you may be offered an investment scam. And so that's why we actually created the Fraudsters Playbook here at the Alberta Securities Commission. With this resource, it actually walks through the tactics a fraudster takes to implement a scam and gain your trust and ultimately steal your money. And it also gives you actions you can take to recognize, avoid, and report those scams. I highly recommend everyone take the time to read it. It's at checkfirst.ca/playbook. You can read it digitally as well as print it off if you want to give it out to someone. And walking through the 7 steps, just briefly, will help you kind of understand the scenarios and how a fraudster operates when it comes to the grooming process and getting someone involved with an investment scam. The first step is that they identify a possible victim. Now here, they actually look for someone who might be having fear of missing out, FOMO, when it comes to a certain type of buzzworthy investment. It could be someone who's nearing or in retirement who is maybe anxious or worried about having enough to leave their loved ones when they pass away. It could be someone young that might have school debt, who's trying to pay it off quickly and is looking to get rich quick. They really look for that money anxiety or that money trauma to jump on. Once they found that person, they befriend and earn their trust. Now, in this step, they work really hard to become very close to them. They might work on trying to understand your finances better and be the one to talk to you about finances. They took a keen interest in that. And along with that, they also try to earn your trust. And so, they always are trying to help and really, manage your finances. The next step is steps 3 and showcase the benefit of the investment. At this stage, once they've really earned that trust and they become friends with the target, they start to show, maybe take them out for nice dinners, might show them a nice car, their nice house, dress really well. They put on this air of success. And this is really to help drive home the fact that they're successful and they want you to be successful, which leads into their 4th step, which is offer the opportunity. Once they've established this mirage of sorts, an illusion of success, and have earned the trust of the victim and have tapped into their worries about money, they say, hey, I know you're worried about your retirement and you're trying to leave money for your loved ones. And I've been your friend for a while now. I have a great opportunity that's made me a lot of money and I'm happy to bring you in on it. It's just like that. That's how easy it is for them to then offer that investment offer. They might provide information, whether it's papers, complex papers that are hard to understand. They might give you false websites. And once they've kind of set up this whole opportunity, that's when they really push to receive the money from you. This is where they're very communicative with the target. You know, they're always pushing to get that money right away, really pushing on those red flags of you know, get in quickly, get in now before this disappears. And they push that angle. Once they receive the money, that's when they move into step 6, which is the disappearing act. At this point, a lot of people, you know, are trying to get their money back and get a lot of excuses like, oh, you can't pull out your money right now. Maybe they don't get any answer at all. And they recognize that they might be involved in an investment scam. That moves into step 7. And a lot of people don't know that there's a step 7, but that's target the victim again. That's the recovery act or boiler room scam. And that's where the fraudster will then sell their information to other fraudsters who will then contact the victim and say, hey, we can get your money back for a fee. Again, no credible agency will ever ask you to pay a fee to get your money back. And so that is a clear you know, sign that you're dealing with another fraudster. These are the 7 steps that will play out with most investment scams. It is a tried and true way of really tapping into the money anxiety of the victim, earning their trust, showing them benefit, getting them involved, and then ultimately receiving their money and disappearing. So I highly recommend reading the Fraudster's Playbook, as it will give you tools and steps or tools and tips at every step of the way. So now that we know about the most prevalent types of scams, the emerging trends, the red flags, and how a fraudster operates, how do we invest safely? Well, we've broken that down into 3 main steps: check, protect, and invest. So let's go through them. When it comes to investing, if you're going to invest with an individual firm, the key first step is to check registration. That will help you understand if they're registered and qualified to be selling you investments here in the province of Alberta. By checking the registration, you can do that at checkfirst.ca. You can also check their disciplinary history. Now, disciplinary history tells you if they've acted or violated securities laws in the past. And that's a great way to understand, you know, how well they are as an investment professional or as a firm. And that's important information to have. You might not want to work with them, even though they're registered, if they've broken some disciplinary or securities laws in their past. So check out their disciplinary history. Once you found someone who's registered or firm that's registered, and you understand their disciplinary history, you have to understand if the advisor is right for you. And so this step is really important in understanding how they're going to help you meet your financial goals. So ask them questions around, how are you going to help me reach my goals? What's the investment portfolio you have planned for me? Do you work with customers like me? If you're near retirement, do you work with those that are close to retirement? Or if you're younger and want more risk, you know, do you provide those levels of services? So ask these questions. You do not have to use the first financial advisor you get. You can really do your digging and talk to a lot of them and find the one that best suits your needs. Remember, this is a relationship for you. So understand that you want to work with someone you're comfortable with and has an investment portfolio that can help you meet your goals that you're comfortable with as well. The other important questions to ask is, how are you paid? Whether that's through commission or hourly, it is a service that you have to pay for, but you have to understand how you're paying for it and how much that will cost over time. Remember, if it's commission-based, that could really eat into your returns over time if it's a large percentile. So know what that number is and see and build up the numbers to see if you're comfortable with it. And finally, what level of service can I expect from you? Before you start investing with any financial advisor, really set the terms of that relationship. How often do you want to talk to them? Is it once a quarter? Is it once a year? Is it once or twice a year? Understand and get that established right away before you invest. They might tell you, oh, I can't afford or I can't do those types of meetings constantly, or yes, I can, that's great. And by establishing that, you get the level of service that you're expecting and needing from your financial advisor. But again, check registration, so important. Just under 1 in 5 Albertans with a financial advisor check their advisor's registration. And it's so simple. You can do it at checkfirst.ca, top right-hand corner, it's a big red button, but 2 seconds on there can help you really make sure that you're working with someone credible. The next step is protect. Do your homework. You know, investing, there is an element of research there, and that can do so much in terms of helping you invest for success and avoid investment scams. First thing, is it legitimate? Do your own research outside of any information that's provided you by the individual or firm. Really dive into it and see the different angles of the business's landscape, see its competitors, see its sector as itself, see if there's any types of you know, changing laws that could impact the business. By looking at this, you can really make sure it's legitimate, it's right for you, and that there's potential for growth in the future, because ultimately you want to grow your money, right? The next is the risk return profile. Is it right for me? If you don't know what your risk return profile is, your risk profile is essentially your ability and willingness to take risk with your money. And this is unique to everyone. Everyone has different levels of risk that they can take with their money. So the best bet is to understand what that is. You can go to checkfirst.ca. We have quizzes on how to, a risk tolerance quiz that you can take that will tell you what your risk tolerance is. Very important information to have. Once you have that information, understand the investment against your risk profile. Whether it's an investment fund, which will provide investment fund facts sheets that will tell you the risk profile, or you know, even individual investments. Understand how risky those investments are before you get involved, and stay within your limit of your risk tolerance. You do not want to invest in things that are outside of it, as it will keep you up at night and expose you to high risk investments or possibly fraud that could, you know, make you lose your money. So stay within your risk profile and make sure you know what it is. Do I understand the industry, company, or investment? Understand that landscape. Understand the investment as a whole. By doing that, you're better off knowing if it's right for you. You know, I used to work in technology, and technology, for most parts, is quite volatile in terms of ups and downs on the stock market. By understanding that volatility, that can help you better understand if that's the right investment for you. So understand the industry, company, investment in its entirety, because that can help you better judge it. Does it fit with my investment goals? If you invest without investment goals, you're going to be rudderless. You don't know what your time horizon is. You don't know when you've reached that goal. So you have to have those goals there. Goals will be those markers for yourself. So ask yourself before you get involved with any investment, how does this get me to where I'm going? If you can't answer that, it might not be the right investment for you. Are there any hidden costs? You know, this is something that, you know, you always could forget when you're thinking of the return part of it, but there is fees for different investment products. Understand how those fees tie into those returns. You know, if you're okay with them, great. But if you're not, or you don't know about them, those could really eat into your returns. So understand what those fees are, and ask the financial advisor or the firm, what are the fees here? Clearly, so you can understand how that will impact your investment portfolio over time. And does it sound too good to be true? This statement is as old as time and is certainly true nowadays. If it's too good to be true, it usually is. If you cannot find the negative or the risk component of an investment, you might be dealing with a constructed investment scam that's supposed to look just amazing. There is an element of risk with investing, and you have to find what that element is and understand that it's not just the return portion that you have to care about, it's also that risk portion. And finally, no research, no financial plan makes you an easy target for fraud. If you're not doing your research, it's easier for a fraudster to target you, because great, I can give you an investment that you're not going to ask questions about and you're just going to hand over your money. That research component is so key. And financial plans help you stay focused. A lot of scam artists focus on get-rich-quick schemes. schemes that will provide you money right away. And by looking at your financial plan and remembering to stick to your financial plan, that can help you push it back against those get-rich-quick schemes and focus on how you want to achieve your goals over time by investing and growing your wealth. So no research, no financial plan makes you an easy target for fraud. And remember, when it comes to investing, ask questions and demand satisfactory answers. Financial advisors work on your behalf. So if you're confused by something, if something doesn't make sense, don't invest, but ask questions and demand those answers. If you're not getting the answers you need, it's not something to invest in. Stick to with your own investment goals. Don't let anyone change you or take you off course. Focus on what your needs are. If you're working with a credible and registered investment professional, they will work towards your investment goals. So stick to those. And if someone's trying to push you elsewhere to different get-rich-quick schemes, you can already know that that's someone you should be working with. Do your research, company, investment, firm, and individual, all critical in understanding if you're working with someone credible and if the investment's credible. Be skeptical. Know and watch out for red flags. If something sounds just amazing, be skeptical about it. No, look out what those nagging suspicions are and really tap into those. Don't ignore them. Talk to others about finances. It's great to pull yourself out of the investment offer that the individual is offering and talk to others about it, because they might uncover red flags that you might have missed. That is super, super important. You know, it's one of those things where you might be so in the weeds, you might not notice it yourself. And don't be a victim of your own manners. You do not have to work with any financial advisor that is assigned to you, and you do not have to accept any investment offer that's offered to you. You do not have to. And don't be fooled by appearances. You know, a lot of times people might think that fraudsters will look a certain way, maybe disheveled, or maybe like a hacker. But really, they try to put on this look of success. They dress well, they have a nice car, they live in a nice house, they might flaunt a lot of money, and that's put on the air of success. So don't be fooled by that. Remember, stick to the fundamentals of research and sticking to your own plan. When you're done all these steps, you're ready to invest. And that might sound like a lot of work, and it is. But no one cares about your money more than you do. And by doing this, you're making sure that the individual or firm you're working with is registered, if the investment is credible and suitable for yourself, and meets your financial goals. Is the investment right for your needs? So it's a lot of work, but this is how you become a successful investor. And I want to remind everyone that there is free and unbiased resources at checkfirst.ca, including video learning series, quizzes like that risk tolerance quiz, as well as budget calculators and compound interest calculators that can help you understand how investments grow over time and how compounding works. There's fact sheets covering today's program around fraud facts, as well as how to invest successfully. And check registration, the critical tool that every investor should utilize before working with any individual or firm. So what can you report to us? If there is suspicious investments that you have seen, or maybe that your friends or family are involved in, you can contact us, as well as any type of investment that you are involved in, and you think there's serious concerns about the company. You can contact us. Or if you believe that company or individual has breached securities laws, always reach out to us. We're here to help you, and we're a resource for Albertans. So suitable complaints include securities fraud, investment fraud, insider trading, stock promotion, selective disclosure, unregistered individuals, and Ponzi schemes. If you're not sure if the fraud is something that you're supposed to report to us or to someone else, contact us anyways. We can get you in touch with the right organization to help you. And you can follow us at AAC Updates on Facebook and Twitter, as well as Check First on Instagram. We have a wealth of great content that we share on a weekly basis, and you can check it out there. And checkfirst.ca, you can actually subscribe to our investor knowledge emails. We give out them on a monthly basis with an Investing Basics article, as well as information like investor alerts or new pages on Check First. So I highly recommend you sign up for that as well. To contact us, you can call 1-877-355-4488, or you can contact me, james.mctavish@aac.ca, and I'd be happy to help you with any questions you might have. And with that, I want to thank everyone for joining me tonight for our last presentation in Financial Literacy Month, and I'll turn it over to the questions portion.
All right. Okay, so I'm just looking. I don't have any questions right at the moment.
Okay.
But it does look like, of course, that you left all the information there with emails and everything. And if anybody wants to get a hold of James, and just ask him privately for any advice on scams or fraud, you can email those particular emails that he gave you, or you can dial the number for the ASC.
Yeah.
I'm just going to double check. I'm just trying to refresh here, like anything that's there, but no, it doesn't look like there is anything. So, well, everyone, thank you very much for our viewing our financial literacy presentation. And hopefully James will be back again in the new year with some new presentations.